I'm Colin Kanalakis, and I've got Denver Todd here as well. We're with Lane Gorman Truitt, CPA firm in Dallas. We've given a few presentations on dealership-specific items in the past. The last big round was PPP related. Glad all that's done and behind us. This is another kind of fun area that there have been a lot of questions recently, especially at our last controllers roundtable that we had in October. And so, since there continue to be more questions about it, we thought this would be the best way to get everybody at least a good foundation of what we've seen so far. And this is ever changing, new information coming out all the time and new guidance coming out all the time. So, we might do another update if there's other substantive items that come up as more things that impact you become more and more relevant. And especially since you got this deadline of things changing January 1st. But anyway, um, we are a CPA firm, as I mentioned. We have offices in Dallas and Houston. Dealerships is our biggest niche. It's about 25% of what the firm does, pushing about 500 rooftops, full service, audit, tax, advisory, consulting. Um, I think we'll let you all do some questions, but our focus is let's get through the presentation first. We'll take about 30 minutes or so. We think most of your questions will be addressed as we work through it, but we have availability for probably up to about 30 minutes or so of Q&A at the end. So can you please just hold your questions until then? Further, we will be recording this. You will all have access to it. I think we'll have it posted to YouTube, is what I hear, so that if you have things you wanted to follow up on, or if you have somebody else in your organization or within your 20 group, or just another dealer friend, you're welcome to forward that on. Is this going to be CPE eligible as well? Kind of asking Darla. Yes, it is. All right. So if you need CPE, as long as I believe the way it usually works is you will get an email after the fact and you'll be able to do an evaluation. And then you should then be able to get that certificate to give you an hour of dealership CPE. So unless there's anything else, I'll turn it over to Denver to get started.
All right, thank you, Colin. I'm going to turn off my video just because of the amount of people on here so I don't lag. So give me a second.
Okay, good morning, everyone. Thank you all for joining today. As Colin mentioned, I'm going to talk to you about the electric vehicle tax credits, more catered towards dealers and what their responsibilities are. So let me get this going. Okay, so our agenda today, I'm going to go over a short disclaimer. We're going to have an overview, 30,000-foot view of the tax credit. We're going to talk about the clean vehicle tax credits. There's 3 of them. I'm going to talk about the advance payment program, and that's going to be the program where buyers can get the credit at time of sale. I'm going to talk about the IRS Energy Credits online portal. That's where you will go to submit reports on the sale of the vehicles. That will start in 2024, but registration has already opened for that. And then I'm also going to talk about some resources that your dealership can implement to help with the rules that are coming out. So disclosure, this is just educational and it's not meant to be tax advice. Also, as Colin was alluding to just a second ago, some of these rules may change in the future, especially the advance payment program, which is the program that customers or buyers can get the credit at the time of sale. That's still in proposed format. It's likely not going to change too much, but there is a public comment period that's going to be ending on December 11th. So there could be potentially some tweaks to how the rules are going to work after that date. I sat in on a presentation that NADA and the IRS hosted about 2 weeks ago. And on that presentation, they had mentioned and I'll talk about this at the very end in the resource section, but you can sign up for emails from the IRS on any updates that are coming out with regarding these energy tax credits for dealerships, and the IRS strongly encourage people to register. That's how I'm going to get updated information if things come out. So I'll show you how to register for that as we go through. Okay, so we're going to talk about the overview, and I'll go more into detail and on some of these things later on in the presentation. But what this tax credit is, for a new vehicle, you can get up to $7,500, the buyer or customer can, or $4,000 for a used vehicle. And starting in 2024, dealers are going to have to register with the IRS Energy Credits online portal. And this is how you're going to submit the sales reports. Anytime you sell an electric vehicle that qualifies for the credit, you're going to have to submit it to the IRS using this portal. And right now, you can register, and I'll go more into that later on in the presentation. But right now, there can only be one user that can register under a dealer's EIN number. And in December, there are going to be that user is going to be able to add more users that will be able to log in through the portal. Okay, so this is we've got a lot of questions about this. This is pretty important. Buyers will not be able to claim a clean vehicle tax credit if the seller has not registered and does not successfully submit a time of sale report to the IRS Energy Credits online. This is starting in 2024. If the dealership does not register with the IRS for the portal, if a customer comes into your store and wants to purchase the vehicle, they can't get the credit right then and there, nor can they get the credit later when they file their tax return, because they have to get this report from you to be able to claim their credit on their tax return. So it's vital that you register through this portal so that the buyers can get the credit. And when you submit the sale report, as you're going through it, you're going to get real-time confirmation from the IRS whether they've accepted or rejected the report that you're submitting. Essentially, what they're going to be doing is they're going to check the vehicle identification number that is being reported on the sale report that you're submitting to them, and they're going to check it against the IRS's list, because the IRS is getting a list of VIN numbers that qualify for the credit from the manufacturer, and that's how they're going to match up to make sure the vehicle that's being sold qualifies for the credit. And then this is really the big thing that a lot of y'all probably have heard about, is starting on January 1st of 2024, if the dealer chooses to participate, buyers can get the credit at the time of sale, and they'll be able to get it in the form of cash or as a down payment on the vehicle they're purchasing. And I'll go more into that later. But what the IRS is saying is they'll refund the dealer within 72 hours after the time of sale for the money that the dealer's fronting for the buyer to get a reduction in the sale price. And then this question also comes up a lot about, does the dealership have to verify the buyer's income? No. Registered dealers are not required to verify a buyer's income. The buyer is responsible for repaying the full amount of any transfer credit when they file their tax return if they exceed the income limitations for the tax credit. It'll get recaptured when they file their tax return. They'll have to pay additional tax if they took the credit when they really didn't qualify.
And I know we'll go into this in a little bit, but what I know a lot of our dealers are doing is adding yet another disclosure form that you get the customer to complete, and that in theory gets them to sign off that they qualify. Because if they don't qualify and they get all mad and everything because they have to pay this all back, at time of filing returns. You don't want your CSI to be hit. So it's educating your salespeople, F&I folks, to ensure that this disclosure is understood, so that you're not getting the backlash at the end. You still will, right? But try to minimize as much as you can.
Yeah, great point, Colin. And also, this is not going away anytime soon. It's supposed to expire in 2032. So it'll be around for a while. So you'll want to get educated on how this all works. Okay, I'm gonna go into the credits now. So there's 3 credits. There's one for new vehicles, electric vehicles. There's one for used electric vehicles, and there's also one for commercial electric vehicles. I'm gonna focus primarily on the new electric vehicle credit, but I'll briefly discuss the other 2. So how I like to think about this is there's really 3 buckets. You have the manufacturer, you have the customer, and then you have the dealer. Each of these 3 parties are going to have a responsibility in terms of making sure they are meeting certain requirements so that ultimately the customer will be able to qualify for the credit. Now, the manufacturer's responsibility is just to get the vehicle to qualify for the credit. It can be either, it can not qualify at all, so there's 0 credit associated with it. And if that's the case, all this reporting that I'm about to talk about, and I'll reiterate this multiple times, you don't have to do any reporting if the vehicle doesn't qualify. Or it can be 3,750 or 7,500. The difference between those values is it's based on where the minerals or the battery is manufactured. If it's not within the US or a country that has a treaty with the US, then it's possible the vehicle will not qualify. But thankfully, you don't need to know these rules. There's this website that the IRS has. It's called fueleconomy.gov/new tax credit. You can go to this website and it will show you all the vehicles, make, model, and year that qualify for the credit. So this is what when you get to the website, what it looks like. As you can see, you can search for vehicles purchased in 2023 or after. And just as a note, these credits I'm talking about right now are actually active in 23. It's just not starting in 24. What's starting in 24 is the ability that the customer can get the credit at the time of sale. That's the major change that's happening. And the reporting on the dealership side where they have to report the sales online. But
one thing I would recommend, yeah, here's a good example. I would recommend that you all, if you haven't already done this, you go and look at it, because many of you might have just, if you're a new car dealer, you know what your franchises are, right? So go at them and identify how many vehicles you actually have that qualify, because the MSRP limits quite a few vehicles, as many of the electric vehicles are more luxury, so there's $80,000 limit. So this is a great way to go there and see what that impact could be. How many vehicles you might be looking at doing. Is this going to be maybe a vehicle a month, or is it going to be, many more? If you're a group and you have a lot of franchises, but you don't have very many franchises that have qualified vehicles for new, used, we'll get to that as well. But you've got a $25,000. How many used, $25,000 less EVs are out there? There might be out there in a year, 2 years, or 3 years. We're not probably there yet. So you all can do a little bit more of a control over this with more of a potentially a centralized person who can do a lot of the management of this, and then they can handle the work with the people at the individual stores to be able to give you more controls in place when the instance comes up. But back to you, Denver.
No, that's a great point too. Also, you might be a dealer right now that is high end or you have no vehicles that qualify. I would still recommend registering for the portal because you don't want to be stuck in a situation that a model comes out and it qualifies and you're not registered with the portal. So then you can't submit the reports and then the customer can't get the credit. So I would say go ahead and just register now because this is going to be around for the next 10 years or so. So you're ready if you do get vehicles that do qualify. But as Colin mentioned, there is an MSRP limit
Sorry, my headphones died. But okay, Colin, can you hear me okay? Colin, you're muted. Are you able to hear me?
I can hear you now. Yes. Sorry.
Okay, perfect. Okay, sorry about that. Okay, as Colin was mentioning, there is an MSRP limit on the vehicle, so that's why there's a lot of vehicles that are not qualifying if they're over the MSRP cap. But you don't really need to know that. You just look at this website to see which vehicles qualify. Okay, so I talked about the manufacturer's responsibility. They just need to get the vehicle to qualify. So the customer's responsibility, um, they need to be buying the vehicle predominantly for personal use, not for resale. They also must be under some modified adjusted gross income caps, and I'll talk about those in a second. And then they also need to obtain a disclosure form from the dealer, which I'll talk more about that. You're going to get the in 2024, if the customer is getting the credit at time of sale, they're going to have to attest to this, and the IRS is going to release a form that you can get them to sign, but more on that in a little bit. So the income caps is for a married filing jointly, it's 300,000, for head of household 225, and then all other filers 150. How this works is it's not a phase out, it's a cliff. So if the taxpayer's $1 over these limits, they don't qualify for the credit. And there's a 2-year period that you look at. You look at the year that they're purchasing the vehicle or the year before they're purchasing the vehicle. So if I'm going to purchase it, if I'm in 2024 and I'm purchasing a EV, I can look at my income for 23 to see if I'm under the limit. If I'm over the limit in 2023, I would have to be under the limit in 2024. Since 2024 is not over yet and I'd be buying the vehicle midway through the year, what would happen is I could attest that my income is going to be under the limit for 2024, or I could wait until I file my tax return to claim the credit. And then if I ends up my income's being over in 2024, I'd have to pay the additional tax back. Well, sorry, if I took the credit at the time of sale and then I ended up not qualifying, I'd have to pay the credit back when I file my tax return. But if I decided not to take the credit at time of sale and wait to file my tax return, I would see then if I qualify or not. Okay, the dealer's responsibility. So I talked about the manufacturer's responsibility, then the customer's responsibility. So here's what the dealer has to do. The dealer has to ensure the original use will begin with the customer, so it's a new vehicle. And then you're also going to have to provide a seller's report to the customer containing the information listed below. So the dealer's name, ID number, buyer's name, ID number, the VIN, battery capacity, and everything listed on here. And again, this only applies to vehicles that qualify for the EV tax credit. If you're selling EVs that are not on that fueleconomy.gov website for that year, you don't have to file the seller's report. It's only for vehicles that qualify. Okay. So as I mentioned before, these credits are actually available right now for uh, taxpayers, customers, buyers. So the reporting that I've been mentioning, there's going to be a portal for 2024 where you report the sale, but for 23, if you sold any EVs that qualify, you need to be gathering the information from the customer, because you're going to have to submit to the IRS on January 15th of 2024. That's a month and a half from now. You're going to have to submit all your sale information for the vehicles that you sold that qualified for the credit in 2023. So if you haven't been doing this, you're going to need to have someone go back and check your EV sales and see if you sold any EVs that qualify. And one thing to mention is the rules changed in April of 23 where less vehicles qualify. So you need to look at the fueleconomy.gov website. And for anything before April, there's a section for after April. I looked at it today. There's 43 vehicles that qualified from January 1st to April 17th. And then after April 18th, there's 38 vehicles. So 5 vehicles fell off, but just something to check. And this is for 2023 only. And as you can see on this page right here, the form on the left, essentially the same thing as this Form 5400 that the IRS just released recently. In the past, there was no standardized form, so I was recommending to any of my clients to use the NADA template, which is on the left side. So either one that you're using to gather information is fine. But going forward in 24, this will all be reported online, but just something to consider. Okay. This question has come up a lot. This is for 2023. So people have asked, so when I register for the portal and it's up and running, can I submit my 2023 sales of EVs through the portal? The IRS has said no. They're going to provide information relatively soon on how you're going to report your 2023 sales. So for 2024, so anything that happens next year, everything is going to be reported through this IRS Energy Credits online portal that you have to register for. And as I mentioned before, if you don't register for this, the customer can't claim the credit. And this is on the right side, this is just the template of what it's going to look like. This must be provided to the buyer at the time of sale. So just keep that in mind. So just some more information. What happens if the new clean vehicle sale is canceled or the vehicle is returned shortly after purchased? If the vehicle is canceled, the vehicle will still be eligible for a new clean vehicle credit, so nothing to worry about there. Now, this is important here and it could bite a lot of people. If your dealership has a return policy on these EVs, how the rules are written, if you go through and you sell the vehicle to a customer and then there's a return period, a grace period, maybe 3 to 4 days where they can bring it back. How the rules are stated, if they return it in that time period and you take it back, you can resell it, but when you resell it, it doesn't qualify for the new vehicle tax credit. So just something to consider. You might want to think about not having a return period for these EVs because you'll basically have a car that's overvalued because the customer could, why would a customer pay $7,500 more for your car that you're trying to resell when they could go down the street and get a cheaper one that the tax credit qualifies for? So just to recap on the EV, what you're going to have to do, you're going to confirm the vehicle qualifies for the credit using the fueleconomy.gov website, and you're also going to confirm the original use begins with the customer. You're going to provide the seller's report to the buyer at time of sale. For 23, it's in paper format. For 24, it's going to be electronic. You're going to give them a copy of the electronic printout that you get when you submit it. And then I haven't talked about this yet, but I will get to it in a little bit. If the transfer election is made by the buyer, meaning the buyer wants the credit at time of sale, the dealer is going to have to provide the financial benefit to the buyer, whether in the form of cash or down payment on the EV. And then also the dealer is going to have to obtain a attestation statement from the buyer. And the IRS is going to release this form that you can provide to the buyer that they're going to sign off on.
So I'm sure that a lot of your antennas are up, because you're going to have a lot of instances of people trying to game the system, right? It's always going to happen. So one consideration, one of the things that Denver mentioned earlier was we get payment within 72 days. Or sorry, 72 hours, not 72 days. And so if the customer is electing to get the money in cash form, check, um, I would consider a policy that would require that you've already been paid by the IRS, which kind of qualifies that it's been validated before cutting it back to them. So that's just something to consider. Then if you have that return policy, which in many cases you don't have a return policy, but we hear a lot of stories with people buying an EV, and it's just there's just big issues that they didn't know they were going to have, or it's materially different in how it holds a charge or how it works in the operation that they use it. You need to look at what your policies are in advance on how you want to handle the flow of funds.
Yeah, good point. And this is a little cheat sheet for how the rules work. The vehicle requirements, I didn't really go into a lot of these things because you're just going to use the fuel economy .gov website to see if the vehicle qualifies or not. Then the income limitations, the taxpayer's just going to have to attest that they're being informed that there's income limitations, but the dealer doesn't have to verify that. And then the seller's going to have to provide this information on the report to the IRS and provide it to the customer as well. Okay, I'm going to go through the used EV and then the commercial, briefly cover both of these, and then go into the advance payment that most of y'all are probably wanting to know about. Okay, so the used EV, this can only claim a credit up to $4,000. As mentioned before, you can use fueleconomy.gov/use tax credit. This will list the models and makes that qualify in the years. The credit's based on the sale price. Starting in 2024, the credit can be transferred to the dealer. So what that means is the customer can get the credit at time of sale. So for the new vehicles and the used vehicle EVs that are being sold to individuals for predominantly personal use, those buyers can get the credit at time of sale if the dealer registers with the IRS portal and they enroll in the advance payment program. So the same process as new EV reporting for 2024, you're going to have to use the portal to submit the sales on the used vehicles, used EVs that qualify, and you're going to have to provide the same disclosures. Here's just a screenshot of what it looks like if you go to fueleconomy.gov/use tax credit, and you can just see like now at the bottom, there's an Audi 2016 through 2018 vehicle that qualifies, but okay.
Or do you happen to know, is it the actual sales price of the vehicle, or is the sales price of the vehicle plus add-ons? So I'm assuming it's just the vehicle itself, right?
You're talking about if they decide to add more
Extended warranties,
accessories?
insurance. I'm seeing sales price of that says it does not include separate financing, extended warranties, insurance, etc. Right?
Yeah, so the F&I products, they're not included as part of the sale price, nor are any taxes or fees required by state or local governments. And it's the sale price before the trade-in,
So
before
again,
factoring the trade-in value.
my radar of things y'all need to evaluate and consider is if you happen to have an EV that qualifies, if you sell it for more than 25, all this $25,005, it doesn't qualify. You sell it for $24,999, it does qualify. Well, if that vehicle happened to be worth more, and maybe you can charge more for F&I type products to be able to make up the difference in where it was, maybe you can get it where it qualifies. But again, these are decisions you all have to go through and evaluate and make, but just be aware of what the components are.
Yeah, I would think right now there's not a lot of vehicles that are going to qualify for this. The one that comes to the top of my head is the Bolt. But okay, so for the use, so there's the sale price, the $25,000 cap. There's also the model year has to be at least 2 years earlier from the tax year that the taxpayer acquires the vehicle. And most important, at the bottom left, it says not have been sold as a used vehicle after August 16th, 2022, based on the vehicle history report. So if you are selling one of these used EVs, you're going to have to look at the vehicle history report to see if this is the first transfer after that date. And if it is, then it can qualify. And one thing about this is if a dealer shows up on the vehicle history report, that doesn't count as a transfer. It would only be when it goes to an actual customer other than a dealer.
So if you're not currently getting those vehicle history reports on all vehicles coming in, here's an added cost.
Yeah, unfortunately. The buyer, the income, there are income caps for the buyer. It's half of what the new EV is. So those are the numbers there. And just some more information, buyer is not the original owner. The buyer cannot have claimed another use clean vehicle credit in the 3 years before the purchase date. Something I didn't mention earlier, but just something to think about because people are probably going to try and game the system until they find out how it works. A taxpayer, like individual, they can only claim 2 EV credits in 1 year, and that's new or used. So if they go buy 2 new EVs and then they trade them in, they try and get a third one, they can't get the EV tax credit on the third one or any subsequent ones. If they're married, the spouses can get up to 4 credits for the year. So just something to consider. And then the seller, you're going to have the same reporting requirements that you did as the new EV, and it's for 24, it's all going to be online. For 23, you need to provide them the disclosure form that I showed earlier in the presentation. Okay, briefly on the business EVs or commercial clean vehicle tax credit. So most importantly, dealer, there's no reporting requirements on this to the IRS. There's no seller report. You don't have to do anything. This is just a business comes in and buys a vehicle from you. It's just treated as a gas-powered vehicle. There's no tax credit transfer at time of sale. Where the buyer gets the credit at time of sale, that only applies to the new or used for an individual using it primarily for personal use. The credit can be up to $7,500 if it's under that gross vehicle rate weighting. If it's over 14,000 pounds gross vehicle rate weighting, you can get up to 40,000. Now, something interesting about this, there's no MSRP caps or income caps. So this is how a lot of the manufacturers are leasing these vehicles and the captives are taking the credit because they're the lessor and they're able to take the credit because this applies to leasing as well. So what's happening is the captive's able to reduce the lease costs and pass it on to the individual leasing the vehicle because the captive can take this credit on their end. And this also can apply to if you have a loaner fleet where you have electric vehicles. I think of Mercedes-Benz, for example. They have a loaner fleet and they put EVs in their loaner fleet. If vehicles are being depreciated, you could take the tax credit on those EVs. The main thing is it must be subject to depreciation, meaning it has to be in service at the end of the year in a sense, because you can't buy and sell a vehicle in the same year. It won't be there's no depreciation on it. And this applies to new and used. Okay, I'm going to talk about the advanced payment program now. Let me see how I'm doing. Okay. All right. So this is the program where I told you everyone already that you need to go register your dealership with the IRS portal to be able to file the sales report. If you want to be able to give customers the ability to get the credit at time of sale, you have to do an extra step. You have to apply for this advanced payment program. With this, if you apply for it and you get approved, what's going to happen is It's going to allow the buyer to get the financial benefit of the tax credit at the time of sale. And it's called a transfer election, and they can get it in the form of cash or down payment towards the vehicle. And the buyer has the option, though. They can choose to receive the credit at the time of sale, or they can choose to receive the credit when they file their tax return. So even if you're participating in this program, the buyer has the option not to get the credit at time of sale. They can wait until they file their tax return. Maybe a buyer that thinks they might be over the income cap and they don't want to get the advance credit at the time of sale because they don't want to have to pay it back later down the road. So that's an example of where a customer might not want it right then. But how this is going to work, if the buyer wants the credit at time of sale, the seller will receive real-time confirmation from the IRS on acceptance or rejection. That's where you go through the portal, you fill out the information, the customer's information, you put in the VIN number, and then what's going to happen is the IRS is going to check the VIN number you're putting in against what the manufacturer has provided for VINs that qualify. And if it matches up, then you're likely to get back a acceptance report. And then you'd provide that report to the customer and keep a copy for yourself. And then what it says is if they get accepted and you're going to give the buyer the financial benefit, you'll get reimbursed within 2 to 3 days from the IRS. So you're essentially fronting the money to the buyer until you get refunded from the IRS. Now, if you have a customer that, if you sign up for this program and the customer wants the credit at time of sale, there's going to be additional disclosure where the buyer is going to have to sign a attestation statement where they're basically stating they understand there's income limitations and it's only going to be for personal use. On the right side here is a Q&A from, or FAQ from the IRS on what they said is going to be on the statement that the buyer is going to have to sign. And they haven't released the form yet, but this should come out in a form from the IRS that you'll be able to provide to the buyer at time of sale. And this is all starting in January 1st. So they keep coming out with new information every week or so on this. Fortunately, they're waiting until the last minute to do all this, but it is what it is. Okay, we'll talk about the IRS Energy Credits online. This is the portal where you want to register. So let's talk a little about the timeline. So on November 1st, the portal open where dealers can register. The IRS is recommending that dealers register by December 1st to make sure you're approved and up and running by January 1st. So in December, dealers will have the ability to add more users to the dealership's account so that you can, and I mean, whoever you select can, F&I managers, general managers, whoever you select to be able to submit the reports, you'll be able to add them then. And then January is when the program starts for the advance payment. Okay, this is just more informational here. I'm not gonna go through all this, but we've been getting a lot of questions about registration. There's a in the back of this presentation, the resource section, there's a step-by-step guide that the IRS released that has pictures for every single step and shows you how to register your dealership. You'll want to use that while you're registering, and it'll give you answer a lot of your questions. But how the IRS is doing this, they're working with a third-party provider called ID.me. What's going to happen is whoever's registering, they'll have to first set up an ID.me account, and it's all their personal information. And then they will connect the dealership's account to their ID.me account. So anyone that's going to be setting up an account to be able to access the dealership's information to submit reports, they're first going to have to set up an ID.me account under their personal information before they get linked to the dealership. And the ID.me account, like anytime you log in, it's going to ask for your, it's going to send a confirmation code to your phone just to verify that it really is you. And this is the same thing that if you're shopping and you're military or a student, a lot of the what do you call it? Businesses that sell goods allow you to get the discount if you log in through this ID.me account. So, okay, I'm gonna go to the next one. This is just some screenshots of what it looks like when you're going through the prompts to register. It's pretty intuitive. It probably takes maybe 15 to 30 minutes to register. So I'll keep going. One thing to mention here, and this is a screenshot from the IRS presentation. What they're saying right now on the very bottom is the bank account information entered that you're going to use if you're signing up for the advanced payment program. It cannot be changed this time. So make sure you're using an account that you're going to keep open for a while. And there's that TADA actually sent an email right before Thanksgiving, I believe. They're recommending setting up a separate bank account for this whole process. So that's something you can decide on your end if you want to go through that process. But these are just examples of what the time of sale report is going to look like. We're going to go through and fill out all the information as you go through. And then just to reiterate, you're going to get real-time confirmation if you're doing the advanced or whenever you submit the time of sale report, you're going to get an acceptance or rejection in real time. And if you are participating in the advanced payment program, you'll get should get refunded within 72 hours. All right, I'll go over the resources real quick. So these are some good links to get some information on how all this works. The one thing, well, first off, this IRS dealer registration guide, this is what you can use to assist you in registering your dealership. The seller and dealer requirements, when you go to that page at the bottom, they have a lot of links. There's some checklists that can be used as you're going through the process that can help you with making sure the customer qualifies, and also the dealership checking all the boxes to make sure you're meeting all the requirements. There's also, you can sign up for IRS updates. This is what I was talking about at the beginning of the presentation. If you go to this link and then follow these steps, you can sign up with your email to get up-to-date information. Anytime the IRS releases anything regarding these credits, you'll get it directly to your email, so you'll be up to date on any changes. So I highly recommend registering for this. And then this guide right here, there's a lot of one-page guides that the IRS has that on this previous page, if you click through some of the stuff, there's some helpful information. One of them is this step-by-step guide for new and used clean vehicle dealers and sellers. It gives you step-by-step what you're supposed to do. It has a QR code too that you can scan and go watch a video on how to do all this. So IRS has said they're going to continue to release one-pagers that will assist the dealers and customers to be more informed on how this all works. So that's why it's important to sign up for this email so you can get the most up-to-date information. But with that, that's all I have.
Excellent, Denver. As mentioned at the beginning, first couple things before y'all start dropping off. This is recorded and it will be uploaded so that you all would be able to download it and listen to it later as you're working through the process. It's also CPE eligible, so look for that email. And then I'm going to jump over to Q&A because there's a few questions that are out there, Denver. Thought we'd go ahead and answer answer these three that are here. If other people have other questions that they would like to ask as well, I would say either type in the Q&A or if you can raise your hand and we'll see what we can do about answering. Can't answer everything, so there's going to be some where we might need to get back with you and we'll do that.
Okay.
Denver,
I'll
you
go
have
through
those
some
pulled
of
up?
these. Yeah. So one of the questions is, how does the pre-owned credit apply to a customer buying out an EV lease at the end of the term? So if the vehicle is more than 2 years old, the customer will be able to get the used credit when they if they purchase that used vehicle, because they're not the original owner. The captive would be the original owner when they lease the vehicle to the customer, and then if the customer, when they buy out the lease, if the vehicle qualifies and it's 2 years or older and the customer's under the income caps, that customer would be able to get the EV credit when buying out the lease. Okay, it says used vehicle EV, essentially only one owner vehicles qualify, correct? Yeah, it's only one individual qualifies for the credit. If there two people are buying a vehicle together, only one person can qualify. Says, will there be an issue if we have two dealerships? So the registration is under the EIN number, the entity that conducts business. So if you have two DBAs under one EIN, you'd report both of the sales for those two dealerships under that EIN.
So Denver, there, that top one is similar from Joe. He's got a situation where you've got a parent entity and then, you know, separate individual. I'm assuming that those are not single member LLCs, Joe. That those are DBAs, but he would register the parent similarly what you just talked about, Denver.
Yeah, I think we might need to talk to him offline on that one. That's a little complicated one. There's some I think we need more facts before we give an answer, but he was asking, how do we reach the IRS with questions? If you if you're trying to register the dealership, the IRS does have on that resource page where there's some, you can take that link. They do have a phone number that you can call if you have questions while you're registering the dealership. I have not heard of anyone getting approved yet. Everyone that I know of, they're still waiting to get approval. Because one of the things about, especially if you applied for the advanced payment program, the IRS has to confirm you're in tax compliance, the dealership is. So I think that's taking time. What is the original start date if we go back to 2023 car deals? It's 2023. Any deals in 2023 that if the car is on that fueleconomy.gov website, you're going to have to submit the information to the IRS on January 15th, beginning of next year for the 2023 deals. Okay, this is a good question right here. So they're saying we've already sent an EV customer information for 2023. Do we need to redo it with the forms you provided? If the form that I listed on there, if you've gathered the information from, if it has the same information that's on those forms, you're good. There's no standardized form. But one thing is you need for submitting to the IRS, you need the social security number of the individual. So if you sold them an EV and then you never got their social security number, you got to go back and get that because you have to submit that to the IRS because that's how they're going to match this up. Because I didn't really talk about the customers in here, but the customers, they have to go back and when they file their tax return for 23 or 24, etc., they have to report the purchase of this EV on a special form. And then that's how the IRS is going to link what you're reporting for 23, the social security number, they're going to link it up to their tax return. If you don't report anything, guess what's going to happen? Probably the customer is going to get a notice from the IRS saying you reported a EV credit, but we don't see that there was ever a report submitted. So that's why it's imperative to make sure you're going back through 2023 deals to find all the vehicles that were sold that qualify for the credit and make sure you get the customer's information so you can report it. This is saying if we have multiple dealerships, we need to set up different accounts. You need to set up, you have to register by dealership EIN. So if you have two dealerships and they have separate employee identification numbers, you have to register separately. For new vehicles, if MSRP is over 80,000 but has a manufacturer rebate of 7,500, will it qualify? Not to my knowledge, it's all based off MSRP. If the vehicle is not on the fueleconomy.gov website, then it's not going to qualify. Okay, is there an approved list of dealers published by the IRS that shows customers what dealers are approved to issue? Wait,
Kind of like a dealership approved, would basically show who's done the registration and who has not.
oh, that's interesting. I don't think so. I'm not aware of that. I
I
could
haven't
see
heard of that
them
either, Mark.
publishing something like that so customers know which dealerships they can go to get the credit. That's an interesting question.
Yeah. And I think one other consideration, I guess a practical consideration, everybody that has a Ford dealership, right? You had to opt in for EV, for new EV. We had a lot of clients that originally opted in. We have some that have since subsequently opted out. This doesn't get you out of the used situation for the EV, but since you have the option to opt back in at a point in the future, again, get registered in case the program changes and it makes sense for you to opt back in. Denver, there's one more question that just came up too.
Yeah. Okay, so it says, can dealer discounts or negotiated prices impact the eligibility of the calculation of EV tax credit for new and used? Okay, so for the new EVs, dealer discounts or negotiated prices don't matter. It's all based off the MSRP. For used EVs, yes, they do. If the customer's if the car qualifies for incentives, that would reduce the sale price. So that would affect the when you're figuring out if it's over or under over 25,000 or 25,000 or less. Okay, this person says if a married couple is buying 4 units that qualify and both names are on all the deals, that disqualify them for the last 2 credits. Shoot, that's an interesting question.
Hopefully we get some guidance from the
Yeah, I
IRS.
don't know the answer to that one.
Yeah. I would think that you would have them each individually buy them. So 2 buy one, 2 buy the other. But maybe there'll be some guidance that comes out that talks about qualification for couples. I'm sure the reason you're talking about that piece is because if they maybe one would qualify for the financing and the other one wouldn't qualify for the financing unless they were co-borrowers on it. So it might create some kind of quirks that would cause problems in the acquisition process, right? So
yeah.
Hopefully we'll see some guidance on that'll address that eligibility.
Yeah, I would assume they would probably still qualify, but I can't say for certain based on what's out there right now.
Yeah.
But
all right. Well, thank you everybody for coming on. It's great to have so many people sign up on such short notice. As you see on here, if there's questions that come up, don't load us up, but you feel free to reach out if you got some quirky questions that come up.
thank you all. Have a great rest of your day. Bye now.
Bye. Thank you.